You might not know this, but businesses have the option to invest their spare cash into the stock market exactly the same way that an individual can. In this video, I'll walk you through the full process with the platform that's currently got the lowest fees on the market at the time of recording. But first, let me explain why you'd invest as a small business, then how you can do it yourself. As a business, you can invest as much as you want, as often as you want, in an attempt to have it compound in value over time. Remember that all investments have risk and can increase or decrease in value. And none of the following is financial advice. I'm simply explaining this process for you to make your own decisions with. Investing your money can, in theory, be a way you try to outperform interest being generated in a bank. If you were to put your money into a savings account, you'd currently get a guaranteed return of around 5% if you were getting the best interest rates on the market. But if we look at investing into the S&P 500 as a comparison, which is an index of the top 500 companies in America, since its creation in 1957, it has returned around 10% on average each year. This difference in interest and value appreciation compounds. So what starts as a 5% difference in year 1 is actually a 63% difference after 10 years and a 330% difference after 25 years. Now, of course, this isn't linear. Some years the S&P 500 has delivered a less than 10% return and has even decreased in value. So I'll link an article in the description of this video that looks at how often the S&P 500 actually loses money. In years where the index has increased, it's often generated much more than 10%. Last year, it increased over 24%, but the point is, it's been a pretty reliable index for decades, and investing in it could potentially be more fruitful than just putting your money into a savings account. This is just one example of many indexes you could potentially invest in, and is only one used for example purposes. Always remember that past performance isn't a reliable indicator of future results. As a business, there's now a very low-cost way to invest your spare cash into index funds or ETFs. Of course, if that's what you want to do, and that's via InvestEngine. The main selling point of InvestEngine is the fact that they have no platform fees and no commissions either, which means you won't pay for any additional fees for trades on top of what the fund takes. And the fund takes this regardless of whatever broker you're using. They also don't charge any deposit or withdrawal fees and allow you to invest in over 650 ETFs, including some of the most popular choices on the market. They're fully authorized by the Financial Conduct Authority, and funds are covered by FSCS protection. There are many benefits to a company investing their spare cash, and InvestEngine lets you do it basically for free if you set up and manage your own investment portfolio. If you wanted InvestEngine to manage your investments for you, then this will come with a 0.25% annual management fee, which is very competitive within the managed portfolio market. And as you have the choice to do it by yourself, it's not a charge that you have to incur, if you're happy to pick your own investments. And let's be honest, a portfolio manager is probably just going to stick you in a global index fund with a few other funds thrown in for good measure anyway. InvestEngine also have a very user-friendly site and app, which makes the investing process as streamlined and simple as possible. So how do you actually invest as a business? Let me talk you through the process. First things first, if you sign up with InvestEngine as a business by using the link in the description, you can get up to £100 in cashback. That's free money for you, and it supports financial interest too. Some terms do apply, so obviously read their T's and C's first. When you first set up your account, you'll be given the option to either create an individual account or a business account, so of course in this case, select business. Then you'll need to supply a business email for a UK registered company and create a password, along with supplying your company number and legal entity identifier number. Your LEI is a number given to a company that participates in financial transactions. If your company buys and sells securities, it will be required to have one. However, if you don't have one of these, InvestEngine will supply you with one for free of charge for the first year of your investing. After that, you'll have to get an LEI number, or InvestEngine will charge you £45 to cover the annual fee. But if you invest £20,000 or more, they'll provide the LEI number free of charge. You'll then need to add details of your shareholders, bank account, and upload a recent bank statement. Then wait for your account to be verified before you can begin investing. At this stage, InvestEngine might reach out and ask for more KYC documents like photo ID and selfies of your shareholders. InvestEngine is a heavily regulated financial platform, so all of this is necessary to make sure that your business is allowed to be investing with them in the first place. After going through the sign-up process, you'll land on your new homepage, where you can open and manage any accounts you like inside InvestEngine. Even when your account isn't approved, you can set up your portfolio with the ETFs that you'd like to add. You'll just need to wait before you can actually deposit cash and invest into your ETFs. Once approved, which may take a few days, you'll be asked to link a bank card so you can deposit money, and then you're all set to create your business's investment portfolio. Click on the Create General Portfolio option on your homepage, and this is where you get to choose whether you want your portfolio to be managed for you or if you'd like to do it yourself. As I previously mentioned, if you do choose to have your portfolio managed for you, you will incur a 0.25% annual fee, so it's completely up to you what you choose. If you feel comfortable enough doing it yourself, then open a do-it-yourself account, as this is free from any additional fees. Now you'll be able to add funds into your portfolio for you to invest into, so if you know which funds you want to choose, simply type them into the search bar at the top. However, if you're looking for investments, you can browse the filters on offer here and select from over 650 different options. Invest Engine allows you to filter by provider, ESG, whether it's accumulative or distributing, just loads of stuff, so you'll be able to narrow things down pretty quickly. For the purpose of this tutorial, I'll add in the iShares S&P 500 fund and Invesco's FTSE All World fund. We are fund investors at financial interest, but funds do offer the added benefit to businesses of reduced volatility. Share prices can fluctuate wildly from time to time, but it's much harder for this to happen to the entire stock market. Now I've found the funds I like, I can add them into my portfolio, and you can have multiple funds here, which you can then invest into as a percentage individually. So for this example, I'll put 80% into Invesco's FTSE All World fund, and 20% into iShares S&P 500 fund. And this is because the All World fund already gives me plenty of exposure to the S&P 500 as it is. But do remember that these aren't recommendations, they're just what we chose to invest in for this video. When you're finished setting up your portfolio, you'll be able to see a breakdown of all the companies that you'll be investing in, what sectors they operate in, and where they are geographically, so you know exactly where your money is going. Once you're happy, click Save and Continue, and you'll now be able to deposit money into your account to invest with by hitting the Invest button on the right. We invested £5,000 for the purpose of this tutorial, but you can select any amount you like here as long as it's over Invest Engine's minimum investment of £100. You'll then receive a pop-up asking you whether you want Invest Engine to auto-invest your money based on your percentage split, so if you're happy with that, then you can allow them to do this. You can also set up auto-invest so that it automatically invests your future deposits, then manually invest this first bit of cash if you wanted to do it that way. And if you're happy just making a one-off investment, then this is all there is to it. You've now invested your surplus cash as a business. However, if you want to continually invest in this portfolio of funds, you can set up what Invest Engine call a savings plan. This will allow you to set a date of when you'd like to invest on a recurring basis, and it will help you set up a direct debit with your linked bank account. Once you've set that all up, you can just leave it to continually invest, and you won't need to manually keep checking it and topping it up. So that's how businesses can invest their spare cash and not spend hours managing a portfolio while doing so.